Are you tired of renting? Do you feel like you'll never be ready to buy a home? You aren't alone. Thousands of people feel the exact same way as you. My name is Mike Smith with Homestar, and today I'm going to be talking about the top ways renters can prepare to buy a home. Now, the idea of buying a home can be overwhelming, but it's actually not as hard as you think to buy a home. You don't need to be rich or have $1 million salary, but what you do need is a plan. With a few simple steps, you can prepare yourself to buy a home. Now, first, to buy a home, you have to save money. Most loan programs require a down payment, but it's not the 20% payment that everyone fears. For some loan programs, all you need is 3.5% of the sales price. So that means if you're buying a $200,000 home, you need $7,000. You'll also need money for closing costs, but there are ways around that. Sometimes you can ask the seller for assistance, or you can choose a lender-paid closing cost loan option. You may even use gift funds for the down payment from family members, but having some money saved is important. Now, you may be wondering, how on earth am I going to save money? I'm paying rent, utilities, not to mention the cost of gas and other daily living expenses. Start by making small changes. Cut back on certain expenses and spending habits and put that money into a savings account. Better yet, invest it if you can. It's going to grow faster. But be consistent. Be dedicated to your savings. You'll get there faster than you think. Next, you have to focus on your credit score. Now, fortunately, credit scores change monthly, and any positive changes that you make are going to be reflected in your credit score much faster than you think. You can head to annualcreditreport.com and get your free credit report. You get one free report from each bureau annually. Look it over, see what you have to fix. Ask yourself some important questions. Number one, do I have any late payments? If so, bring those accounts current as fast as possible. This is going to hurt your credit score the most. Do I have over 30% of my credit lines outstanding? If so, pay your balances down. Are there any collections or public records? Get with those agencies and set up a payment plan or a way to satisfy those debts. Now, if you've already begun the loan application process, speak to your mortgage professional before doing anything with your credit. You don't want to do something like start closing your zero balance accounts, because that can actually hurt your credit score. The faster you work to improve your credit score, the higher it will be when you're ready to take the plunge and buy a home. Now, once you've established your baseline, focus on what you can afford. You can go online and use a mortgage calculator to see what you can afford based on your current income and your financial situation. But better yet, give someone like me a call and we could start looking into your options together. Now, if it turns out what you can afford is much less than you hope, think about ways to improve your situation. Do you need to start a side hustle to bring in more money? Do you spend too much money and need to cut back so your debt-to-income ratio is within the parameters of most loan programs? Ask yourself those questions. The key is to start now. Even if you won't buy a home for a few years, the more money you save and the harder you work to improve your credit, the more options you'll have when you're ready to transition from renter to buyer. If you have any questions, be sure to reach out to me. I'm a mortgage lender and I'm here to help. You can email me at mike.smith@homestarfc.com. That's mike.smith@homestarfc.com, or call 865-378-7141. As always, thanks for watching.